Now, this week, the great and good of the finance world have been meeting at Davos in Switzerland as the markets face the prospect of a volatile year. Where does that leave technology stocks, a notoriously difficult gamble, and the so-called unicorn startups, companies that come from nowhere and suddenly get a valuation of $1 billion or more? Well, joining me to read the runes is Business Insider's technology editor, James Cook. James, good to see you. Investment in the right tech stock is always a bit of a gamble, isn't it? Do you think the venture capitalists are getting it right, or are they piling money in only to lose it?
I think they're picking the right stocks, but I think what we can look at here is the valuations that have been going up and up and up. And companies are reaching valuations of $10 billion, which is absolutely crazy. So I don't think it's a matter of the wrong companies. I think they've just been overhyped a lot, and we're going to start to see a correction in that in 2016.
Where does the overhyping come from? A sort of collective will for these things to succeed?
I think it's in part in that. I think if you're a startup CEO and you're raising money, you're going to ask for a bigger valuation, because the one thing you don't want is to go down in valuation. You don't want what they call a down round, which Foursquare had to raise recently. You still get the money when you do that, but you're worth less than you were before. So trying to avoid that, and that meant the value has absolutely skyrocketed over the past few years.
Where does the momentum gather? I mean, there's some kind of magic for this. Is it pure serendipity that one company manages to grab the zeitgeist of the day? Or is it actually now quite a clever science about the usual channels of person-to-person contact and good PR?
I think it's a mixture between the two. I think what a lot of investors are looking for now is very good patent protection on ideas. Uber didn't exactly have patent protection when it launched. Another company did, Sidecar. They've just gone bankrupt and sold all their assets to General Motors. So it's not just patent protection, it's having a good idea and reaching the consumers fast.
And the whole world of finance and technology, financial technology, which is almost getting into the sort of derivative level of complication, I think, for the regular citizen or the citizen investor. What's going to happen there? That's another dangerous area to go into, one would think.
It's a dangerous area, but there's a huge amount of money there and a huge amount of opportunities. So the COO and president of Goldman Sachs in Davos and said, this is a huge opportunity for us. He did say that, yes, the rivers will run red with the blood of unicorns that are dying, but they can move in, they can buy them, they can invest in them, they can actually have a lot of fun with this, and there's a huge opportunity.
And while we're talking money, James, you'll be aware of the Google headline this morning. Is it Google or Alphabet? I'm not sure. It seems to be Google anyway. Have agreed to pay 130 million. 130 million would be very useful to you and me, but at that level, it's a pittance, isn't it? It's loose change they found down the back of their collective sofa.
It is, but it signals a shift. Google's message has always been, we pay the full amount of tax that we should do in the UK. Overnight it emerges, actually, hang on, we haven't paid this. That could lead to not just Google paying more, but lots of other technology companies making a bigger tax contribution.
James Cook, good to talk to you. Thank you very much indeed. This is Digital View on Sky News.